Hey guys, Akil Stokes here. Welcome back to another day trading walkthrough. Before we hop into things, I want to remind you guys, starting November 14th, we're hosting a free online 1-week trading workshop. We got a lot of cool guests that are going to be there. We're going to talk about a lot of different topics and concepts. So make sure you secure your spot. Head over to www.tier1trading.com to register. And if you're new to the channel, remember, hit that subscribe button. That way you don't miss my latest update. If you've been subscribed, do me a favor, hit that like button and show your support. Any questions or comments, leave them below. I'll make sure to answer them for you. Very wiki Cody on the pound dollar 15-minute chart. If you guys are paying attention. If you remember, we looked at an ascending triangle here on the pound dollar earlier this morning. One of my favorite patterns, but this particular case, not at a location that I really cared about at all. We did see some wickage on the 15-minute chart where price once again tried to spike above not once, but twice. And you can see by the wicks, it was rejected again. So a positive sign for the seller. I'll tell you what, this is one where if you have that short bias, if you get a lower low, lower close, that is a good sign for a short, right? 2 rejections to the upside, followed by a candle where the bears win the session. Very good sign for a short, as you would guess that the buyers, or excuse me, the buyers would have given up some up at that moment. Again, you waste a lot of energy trying to push up to fail twice in a row. You get defeated. You typically look for another opportunity where you say, hey, you know what? I'm going to live and fight another day. So again, keep an eye on this 15-minute chart. We got about, 7 minutes until our next candle closes. If you get a lower low, lower close, again, if you're someone that has shorts on the mind, if you get a lower low, lower close here, I think it's a very good opportunity to sell to the downside. I'd look for a retest of the low of this this pattern formation. So you can see our ascending triangle basically starts. This is our first high. This is our first low. You got a nice little mesh point in here around right around 115 evens, a little bit higher. If we move this up to about 115 tens or even 115, if you want to be more conservative, about 115 14s, I think that's a solid level that you can look to shoot for. Depending on how this closes, that could be a decent risk reward. Let's see, kind of our ATR is 15. This is the tough one. If you're doing a bigger stop and you're getting above the highs, we're looking at 81s for a stop loss, which would be right here. That's if you're doing an ATR based stop. Again, you don't have to. If you're shooting for here, doesn't give you a lot of room for that lower low, lower close. In order to maintain a 1-to-1, you need that lower low, lower close to come right there. So if you're using a smaller stop loss, which honestly, you can probably get away with a 0.5 ATR, right? If you're wrong, you want to be wrong right away. You can probably get away with an ATR about, or a stop loss like right here, if it's within your rules, right above these spike highs. Because again, if we get a lower low, lower close, this shouldn't come back. Then that moves your margin, your 1-to-1 margin down a little bit. Obviously, you have to follow your rules for a stop loss, but I don't think you need to be this high to know you're wrong. In this scenario with these 2 spikes, you should know you're wrong right away with that lower low, lower close. Because if we come back up here, the trade's most likely not going in a direction. We're going to break out to the upside. But follow your rules, of course. So we got our lower low, lower close here. Let's take a look at this. Let's get these VS1s out the way. Again, so if you're using an ATR-based stop from the high, here's the problem. ATR is 15, right? So that means we got to get at 82s. Again, 82s is going to put us right up here. If we're looking for just to move down to this level, and again, your targets could be lower, they could be higher. That's going to, be up to you. But if we're looking for just to move down to that level, it's going to present us with a difficult risk-reward scenario. All right. However, if you're someone that is allowed to maybe use a 0.5 ATR stop, so maybe you can get at 72. That little bit of a difference can make a big difference in your trade because your entry is right here at market. That puts your stop loss right up here above the highs. Again, I still think it's a very safe area to be in. I mean, it's not one that works within my rules because I need a 1-to-1, but I think it's a very safe area to be in. Now you can shoot for those lows here and keep a good risk reward on the trade. Looking from 115.45 to about 115, 15, something like that. So not a bad day trading situation in the lower time frame. And of course, if you have the ability to actively trail, that's good as well. So we'll keep an eye on this, but looking for a move down to 115, 15s here on pound dollar. And then, remind me, I know Cody, you're looking for continuations downward. Yeah, this is a tough one because we've held this structure level here. Maybe 114 if you want to look for extended targets, secondary targets. 114.70s. $114.70s for a secondary. That's right in here around this lower level structure. That's a good secondary target level. Let's see this real quick. Let's do a Fibonacci inversion from the top of our pattern to the bottom of our pattern. See if we get anything down there. 1618 right at 114.61s. Yeah, I'd say secondary targets anywhere in this level, depending on your appetite for risk. Either 114.61s down here or the top of the shelf. And this is going to be, when I say risk appetite, when we talk about structure-based trading a lot here, and people have different appetites. So like some people like shooting for the first sign of danger, so the beginning of a structure level. Some like shooting for the very bottom of the structure level, right? No different than like someone who takes targets at like the lowest close or like the lowest wick or something like that. There's no wrong or right answer. It is a personal preference. Again, you can try and find as much confluence as you want, but solid levels for secondary targets here, and that's going to increase your potential risk. You'll get more than double on that secondary target looking down here or stretching it a little bit further to here. So yeah, I like the trade, guys. I like it. Not one that I would be able to personally take if I was still day trading because of that risk reward. I have to do a 1-to-1. But I like this trade. This is a true kind of counter trend trade where you're looking for a sign of structure to hold. In this case, a potentially fake breakout pattern, and then a move to the downside. This is kind of old school classic Akil. Classic Akil. You see a lot more from me now, but there was a point in time where I just traded support and resistance. I mean, I guess I only trade support and resistance now, but I just traded like rejections, like true counter trend nature. None of that pullback stuff. Just go to structure, hit it, get smacked in the face, and let's catch a little bit of relief. All right, guys, so it's a few hours later, and you can see the trade has completed perfectly. Unfortunately, I wasn't able to kind of record the real-time step-by-step and give you the psychological dilemmas that happen when the P&L is actually on your chart, like I've been doing in these videos. But I was uploading the recording from the live room. It took a little longer than expected, so my hands were tied. But if you've been watching my videos for any time now, you know I'm not just about showing hindsight stuff that wins. I don't really care about that type of stuff. I care about you seeing the execution of the orders. I care about you seeing the mental side, the psychological side of trading, of sitting through specifically a day trade. And of course, I care about you guys seeing the analysis. And at least you got the analysis in this one. But trade ended up really well. We went down, we smashed target ones. We gave a little bit of a stall. It wasn't really much of a psychological damage in this one as well. And then we came down and smashed target twos, both the upper end and the bottom end. So despite what type of trader you were, whether you were aggressive or conservative, trade worked out really, really well. Good trade. I think, I don't know how many of these day trading videos I did. I think I'm 3 wins, 3 losses, 3 wins, 4 losses, something like that. For whoever's keeping count, doesn't matter. But the point is, hopefully you got something informative out of this video. And if you want some more informative information, remember we have that free 1-week workshop starting November 14th. It is online, it is 100% free. Just head over to www.tier1trading.com. You can register, sign up, secure your spot, join us live, and or watch the recordings after each set.